Hi, welcome to the Market Alert for Tuesday, the 26th of September 2017. So yesterday in the pound, we had a sell signal. The market moved lower from this down to the scalp before moving back towards the entry price there and then continuing to move lower. But it was a slow grind down. It wasn't a precipitous drop as we've seen in the Dow later on in the afternoon before finding support as ever. In the daily chart of the pound, you can see we've got this sideways move going on at the moment. Very much defined sideways range following the recent move to the upside there. So the market's consolidating at the moment in a sideways range. And let's see what we've got news-wise to assist us today. I think Yellen's speaking today, isn't she? It's, if I remember rightly, yes, she's speaking today. So Yellen out at 5:45, and also Brainard out at 3:30 p.m. Nothing else to move the markets this morning for the pound. There is no UK economic news items out today. In the Dow, interesting day yesterday. The market started off moving to the upside and then was slammed, and the market moved lower after officially announced that the German Chancellor Merkel had once again regained power officially, and of course problems there with the far right making huge advances on or during this election. So I had a situation where there was a loss of 40 points on the first trade, as you'll see if I just mark these up, and then the market moving lower to collect. See there, you've got the entry price and then the entry price for the short. Let's just remove the long trade there. And then the market moving lower and going through the 20-point scalp, which you'll see there, having gone through the support level here at 22,300. Market's going through there, goes through the scalp and then drives through once more. 55 points down to the 22,250 level, but trailing the stop at 50%. Market puts in a lower high here, but then starts to make lower highs here, so you manage to squeeze a bit more out of the trade as the market then starts to come back, which we see there. Alternatively, if you went on the buy side, but having made the money back and the one on the pound in the morning in the first hour of trading, or the first couple of hours of trading, you know the market's going to become sideways. But had you have taken this one, this trade, it will have resulted in a loss as the market came back and retested the low, or the stop over at 22,239 before moving to the upside to the scalp area. So an interesting one there, but like I say, the first trade a loser, the second one you pull the money back, 44 points plus the 20 from the pound as well. But had you taken this one, I'm going to give them back the profits of the pound and plus another 8 points. The rest of the session, well, it's the same pattern, isn't it? We're getting this sideways move following the first couple of hours of trading. If you don't get it in the first couple of hours, which is likely to be today because Yellen's speaking at 3:30, so the market's going to trade sideways for an hour until she speaks, and it's Tuesday, so again you've got to take that into account. So interesting to see how this one plays out today and what she's got to say. So I don't think it's a Fed announcement as such. She's probably speaking at some university or something, which is why it's been highlighted there. And then finally, in the implied volatility, as you would expect, this picked up yesterday, moving up to 795 from 716, which again would be no surprise because the market is starting to show some sort of nervousness And added to that as well, I'll just grab this and bring this in to show you. We've got a situation here, which I read this morning, where the VIX nears record low. Investors have never been more worried about what happens next. And there is a future volatility index, which you can see here, which is also traded on the Chicago Board of Options. And this is showing a future projection back to record highs for the volatility index. And again, that's no surprise really, because they've been able to sell the volatility using the VIX futures contracts. This trade has gone on for months and months where the market's been quiet. We know the story is the same old story. So we've got a situation where volatility has been forced lower to convince the market that everything's fine with the stock market. If the stock market's up, then the consumer's happy, everything's happy. It looks like they're making money in their portfolios, the pension funds, and therefore keeps the illusion going for a bit longer. But a correction is due. It's I think it's the fifth longest span on record that we've not had a 5% correction, let alone a 20% correction. That's going on for, well, probably a new record on that one. So we are due for a downside swing in this market. There isn't really anything to actually send the market higher. We've got the normalization of the debt, which is a 78th month process apparently, according to Yellen. Can't see it happening myself. I really can't see this one happening. So again, we're now at those sort of highs, the volatility low, where we could see sort of corrections. And we saw this yesterday where they tried to force the market down, then brought it back. But at some point they will give up buying it back, and it will be allowed to find its own fair value. So bring on that day is what I say as intraday traders. It's what we are looking for, but who knows when it's going to happen, because they keep selling the volatility and bringing the market back. Right, that'll do it for this one. Reporting if there's anything to report in on about. But as ever, thanks for watching. See you in the next one.